The next big thing that we've heard a lot of people talking to us about and asking us about, because many people, Joel, know your view on gold, is this rally, this 50% rally in gold because of de-dollarization? The fact of the matter is, no. There's a whole entire other big issue that's going on that when Mohammed Al-Arian and everybody else are talking about, oh, this is a sign of de-dollarization of gold, you're missing the point. Because look, when you look, Joel, right, I mean, the dollar index is basically flat for the last year and a half. So what do you think is the real reason why we have seen gold explode if you don't think it's de-dollarization?
Well, it's definitely not de-dollarization. I mean, years ago, I'd say before the pandemic, 8% of the world's trade settled in dollars. Today, it's closer to 13, 14, 15%. Settles in dollars, right? If you want to buy stocks, and the U.S. stock market is bigger than the rest of the world combined, and you want to get dividends, then the U.S. corporations pay more dividends than pretty much any other part of the world, right? Or if you want bonds, corporate bonds, you're forced to put those into dollars, right? If you want U.S. treasuries and get a healthy 4%, while Japan is paying 1% and other countries are paying 2%, you want a healthy 4% guaranteed, of course you're going to put your money into, you're forced to put your money in US dollars. When I say you, I mean every other government, every other sovereign, everything else. So the reason why gold is up isn't because the dollar is the problem. It's because everybody else's currencies are the problem. And so this idea that the BRICS are going to get together and create a new currency when each of them cannot possibly manage their own currency well. I mean, so first, let's just talk about the BRICS. This is the Brazilian real to the US dollar. Collapsing, absolutely collapsing over the past year, and it hasn't been great. Let's talk about, right, the Russian ruble. Well, we know what's been happening with the Ukraine and everything else. This has been terrible. Despite 20+% interest rates that Russia's put on to try to improve the value of the currency, it's still collapsing. The government of Russia is doing everything they possibly can, and it's still not working. And the ruble's collapsing to the lowest levels we've seen in pretty much forever, right? If we talk about the Indian rupee, right, I'm walking through the BRICS now. The Indian rupee is getting destroyed, meaning that currency is losing value on a daily basis. Let's move on to China, right? What's crazy is China has a massive problem, which is while at the same time, this is over a longer period of time, while the Chinese renminbi, the Chinese yuan, has been decreasing in value, China internally is also experiencing deflation. I want to tell you, this is a problem for China of epic proportions, that the value of their money is falling, and yet the prices of their producer gate, things coming out of the producers and manufacturers, is falling at the same time. This is not a currency issue. This is no one's buying the amount of products that China's trying to supply.
Disaster.
It is going to be horrible for China. And so and then, by the way, throw in the S in BRICS for South Africa, right? This is not doing well either. All these are collapsing versus the dollar. So the issue of why gold is running isn't because the dollar is getting destroyed. It's because every other currency in the world and every person in China is saying, should I keep my money in the bank in renminbi or should I buy gold? Right. If I were in South Africa, would I leave my money in their currency, or would I buy, I don't know, Krugerrands or whatever else? Right? If I'm in Brazil, if I'm in any of these countries, I'm going to do everything I can. So when you have an increase in the demand for gold from, I'm going to say, very large portions of the world, and the amount of gold created every year is what, 1.8%? You can only grow the gold by something like 2% a year. It's less than that, I think. 2% a year. But the demand for gold suddenly increases by 4, 5, 10, 15% in these countries. Of course the price of gold is going to go up. And it deserves to. I'm not saying it doesn't. I'm saying when you have this kind of currency devaluation everywhere but the U.S., that is a sign that gold belongs where it is. But to say that gold is going up because of currency devaluation of the dollar is just not. Robert Kiyosaki is another one. Right, the Rich Dad Poor Dad guy who keeps going around for the last 10, 15 years saying the dollar is worth whatever. Look, I'm not saying the dollar didn't take a big hit. It did during the pandemic and during the Biden administration, right? But once the Fed started raising, and not even, just all the first 2 years of the Biden administration, but once the Fed started raising rates and cooling the economy down, the dollar's gotten stronger against everyone. Now, I'm not saying I would invest in dollars. This is not what we're saying. We're simply saying that the reason gold is going up is not because of the dollar.
Exactly. It's not because of And you know, there's something to be said, Joel. You know, the nice thing about a broken clock is it is at least right twice a day. It is staggering that Robert Kiyosaki has literally not even been able to get that right. Right? He's not even been as right as a broken clock. It's wild.
Kiyosaki,
and you know, if you look,
these discussions have been, it's like every year it's going to be a massive recession. Every year the dollar is going to collapse to zero. It's worthless. Buy gold. Put gold bars under your mattress. look, if you want to make a gold trade because you realize that the rest of the world's currencies are in deep trouble, right? And as Rob's going to talk about in a second, the geopolitical issues, because gold historically goes up with geopolitical issues, tensions, war, whatever, and currency. And they kind of go together. And I'll let Rob talk about that. Rob.
Yeah, no, I mean, Joel, yeah, you're exactly right. You think there's a healthy Venn diagram in terms of buying of gold because of currency destabilization and buying gold because of geopolitical risk. And if you look in 2024, the biggest buyer of gold was Poland. And Poland isn't buying gold because it thinks that the zloty is going to collapse. It's buying gold because it's right next to Russia, and it looks at what happened in Ukraine and goes, I'd rather have some hard assets to be able to do this. If you look at the rest of the biggest buyers of gold, Turkey, on the other side of the Black Sea from what's going on in Ukraine, right? Not doing too great there. Also, Azerbaijan, right outside of Russia. You look at Uzbekistan, you look at Hungary, you look at Serbia, you look at Georgia, right? Georgia, which literally has been, everybody talks about Ukraine. When Ukraine was invaded, Georgia was invaded by Russia also. Just nobody talks about it anymore because it's not that big of a country. All these countries, right? It's the reason why they're buying gold isn't because the dollar is collapsing. The reason they're buying gold is because they're worried that, oh, holy cow, there might be a lot more geopolitical uncertainty. That's an invasion of my country. I'm going to need some hard assets to buy stuff. And the best part is, right, Joel, is they talk about all this, but they're not even storing it in their own country. They buy it and then they store it in the U.S. because they know that's where it's going to be safe.
It's funny the amount of gold that's left the UK because people are worried that given the UK's terrible administration of Brexit and everything else has been crushed in the UK. But the fact is the reason why the dollar's stronger is let's say you're in Poland, let's say you're an individual in China, let's say whatever else, and you want to invest in the best passive investment in the history of the world, which is stocks. Passive, meaning you're not actively trading. You just buy U.S. stocks, and the performance you get is fantastic over 10, 20 years. Fantastic. You have nowhere to go but the U.S., right? But the U.S. for stable, long-term stock appreciation and the dividends. If you want bonds or T-bills, where are you going to go? If you want a good interest rate and with reliable, safe, I don't know, things like bankruptcy law, you don't have that in China. If a company in China says, oh, we didn't make our interest payment, you can't go and sue them and put them in default. That's up to the Chinese government to decide whether or not they're going to do anything. Or they just say, sorry, we didn't make your interest payment. We'll make it next time, right? So if you want assurance of interest payments, you want assurance of your principal back. If you want to invest in venture capital because you want an extra higher return, well, the world's venture capital funds, right, are smaller than the U.S.'s. Let me say it a different way. U.S. venture capital is easily 3, 4, 5 times bigger than the rest of the world's venture capital combined. U.S. angel investing is 5 to 10 times the rest of the world combined. The U.S. produces more oil and gas than any other country. The U.S. produces more technology than any other country. The U.S. produces, even in food, right? Number one calorie in the world isn't rice. I thought it was. Number one calorie in the world is wheat. And the world buys wheat more from the U.S. than any other part of the world. So if we talk about the SWIFT systems and banking and whatever else, at the end of the day, the reason why the dollar is remaining, right, the reserve currency and will for the rest of this century is because of things you see getting put in place, especially what's happening with the terrible, right, currency issues that all the other biggest currencies in the world are having. That's why gold is running. And it may continue to run. I'm not saying don't buy gold. I'm saying it's an interesting trade as long as you see all these other countries destroying their currency and doing things like going to war, because war is currency devaluing. The worst
100%.
currency devaluation that happened in Japan was World War II. That happened in Germany was World War I and World War II. In fact, go around the world and you want to see what happens to a currency that gets destroyed, that collapses, it's always associated with war because nothing is more inflationary than spending more money to destroy things. You have less stuff around and you have more money around. Well, what does that do? Of course it causes inflation, and you've seen that. So gold may still remain to be a great trade for a 1 year, 2 year, 3 years, who knows? It could be. But it isn't because the dollar's de-dollarizing or because the U.S. stock market fell by 10% in a correction that is going to have a rebound at some point. Maybe not yet.
Yeah, exactly. It is. Let's stop pointing the finger in the wrong direction here.